Hi everybody, I'm Tom Dorsey, President of Dorsey, Wright Associates. It's the 6th of June, 2013. This is the DWA Minute, or Minute or Two. First I want to talk about the market itself. What you've been seeing here in the last few days is a big sell-off in the stock market. And a lot of this is what people call disintermediation. People have been buying these interest rate defensive type stocks. Brokerage firms have been pushing these defensive type stocks, high yield type stocks for a very, very long time now. The investors are loaded with them. What happens with changes in interest rates? As interest rates begin to rise, as our indicators are beginning to suggest, there's an inverse relationship to the price of the underlying that has a high yield. So when you think of utilities that pay relatively high yields, there's going to be an inverse relationship of the underlying price of that stock as rates begin to rise. So you may have locked down a 3 or 4% or 5% yield in some particular stocks. As rates begin to rise, you're now going to start giving it up in equity where the value of the stock underlying declines in price. That's what's been happening lately. Where is it going to move to? I'm not sure. We're watching very carefully. But one of the things that's been underutilized over the last few years is commodities. What's interesting about commodities as an asset class is there are so many different pieces to commodities, from corn to soybeans to gold, silver, oil, natural gas, everything. It's almost like each one of them is a separate piece. But we look at commodities in general as an asset class. Well, something's been happening lately. All of a sudden, we're beginning to see some major buy signals in corn, symbol CORN. That's an exchange-traded fund. Soybeans, SOYB. Cotton, BAL. What's interesting now is you don't have to open a commodity account and trade commodity futures to be long or short commodities. The exchange-traded fund world now allows you to do that. So the average investor can buy one share of cotton, symbol BAL. So take a look at some of these things. They may fit into your portfolio. My wife just the other day, we were in the store and we were looking at bacon, and she said, "My God, what has happened with bacon? The price has just gone so high." And I said, "You got to look at the price of live hogs. If you look at the price of live hogs, they've gone straight through the roof. In the last couple of months, they've gone up more than 25, close to 30% in price. That's happening with live cattle and the price of meat. You'll notice it in the stores. Well, you could hedge this meat. You could hedge your grocery list by buying exchange-traded funds that actually have the commodity itself as the underlying." So that's all we have this week. I think it turned into the DWA 3 or 4 minutes, but that's okay. We'll catch you next week.